You just got earlier, guys. 3 days off the screen, Maharashtra Day, Friday holiday, Saturday, and then Sunday. Monday morning live, and the tape is extremely hot right now. GIFT Nifty plus 92 at 24,239. KOSPI plus 3.93%. Taiwan plus 4%. Brent backed off the Hormuz peak 121 on Thursday and is currently at 108 right now. This is Tanmay Edge, episode 31 of season 2. I am Tanmay Kurtagoti. Today is wing paid recap and Tuesday pins the range setup. Let's get into it. US Friday closed Nasdaq plus 0.89%, S&P was plus 0.29%, Dow futures was flat. Tech led the rally on Friday. Risk on into the weekend. That setup was Asia's pre-market opening, and then Asia today morning delivered. KOSPI plus 3.93%, Taiwan is up by 4%, Hang Seng is up by 1.58%, Nikkei flat on the holiday tail. China onshore closed for May Day. Jakarta plus 1.53%. The whole region opened risk on after the 3-day Western chop. Europe on Thursday was very bullish. CAC was red, FTSE was flat, but DAX was 1.39% up. Leadership confirms risk on. Now commodities. This is where episode 30 thesis break healed. Brent crude live at 108.24, up 7 cents on the day, but down about $13 from the Thursday's intraday peak of 121. Iran proposed peace talks on Friday, that is the cooling catalyst. WTI trading around 101.79, MCX at 96.52, down 2% on Friday. So the Hormuz trail is still active but bleeding off, not extending. That matters because episode 31 branch trigger was Brent above 125 by Monday EOD. We are $17 below it. So branch trigger unfired. Gold trading at 45.94, down 0.38. Very bearish technically as crude eases, the macro hedge bid eases too. Dollar index below that 98.50 mark, trading at 98.20. USD INR is trading at 94.91. Intraday print on Thursday was 95.34. So some cool off over there. The all-time low held. So we are below it. Rupee is stable enough. Bonds, Indian 10-year bond is trading at 7.06% yield, above that 7% mark. Rate stress is real. US 10-year is trading at 4.38. Japan's 10-year is trading at 2.51. No fight to safety bid over there. Crypto Bitcoin reclaimed 77,000, Ethereum at 2300, ETF inflows at 1.9 billion in April. Risk on across asset classes is going on. Now the participant data locked from Thursday's close. Pro first because Pro flips first. Pro index futures came in long at plus 1,42,365 into Thursday's close. This is structurally long, up from Wednesday's plus of 94,000 that we saw. So Pro deepened the bull bet despite the Hormuz panic intraday. Pro index calls plus 92,000, deepened from Wednesday's 66,000. 26,000 fresh long calls added by pros. So the pros reset that we called on episode 29 went deeper, not lighter. Pro index put plus 2,99,000, hedge is intact. So the structure is long futures plus long calls plus long puts. Synthetic straddle on directional long, betting on the movement either way while keeping the bullish deltas on the book. So FIs, if we look at futures at minus 1,71,000, covering is continuing from a peak minus of 2,88,000 on April 13th to current 1,71,608. About 1,17,000 contracts covered over 13 sessions. Pace dropped from 87,000 in a single day record closing to 5,000 a day. Now that is what we are seeing. Panic phase done, structural grind active. So FI's April month cash minus 70,000 crores sold. DIs bought 51,000 crores. Net FI index futures plus 3876 crore positive. So FIs sold cash but bought index futures. Rotation, not panic. April 30th daily FIs cash 8,000 they sold and DIs they bought around 3487 crore. Heavier sell day on Hormuz day, but the month total still squares. Client side, they are max bullish, getting trapped tighter. Long calls flipped negative 1,36,814. They flipped short calls. Short puts at minus 7,17,562. Short puts massive long calls trimmed equals retail still selling wall, collecting premium shorting the tails. Pair trade ratios on FIS stock versus FIS index short sits at 4.83 to 1. long the stock book by 8,29,964 contracts. That's almost 8,30,000 contracts, and short the index by 1,71,608 contracts. That's 4:1 pair. Tells you index short in the portfolio insurance, not a directional bear call. Hedge, not crash. Levels for today. That is what is important. So floor stands at 24,000. That is the Thursday's low. Magnet still stands at 24,000. That is Thursday's close at 23,997.55. 4 points of the levels. Walls at 24,200 and 300. Give plus 92 implies in the 24,200 zone where we are going to open. So we are opening at the ceiling of the pin band, not at the magnet. Tuesday is Nifty's weekly expiry. The 5th May chain implied move is plus or minus 460 points. IV is currently trading at 15.29, cheapest front weekly of the season 2. 5 predictions for Monday settle down. Locking now. So 1. Nifty settles in 24,000 to 24,200 zone. The probability of this zone getting hit is more than 55%. Magnet pull is strong here. 2. The floor breaks down and we hit 23,800. No fresh break, but 23,800 stays. 3. India VIX stays in the 17 to 20 band. No panic spike above 22. 4. Pro index calls remain net long. No flip back short. 5. Brent does not exceed 125 by today's close. So the trigger is if Brent rips above 125, scrap pin thesis. So the fading would happen. But along with that, 24,000 to 24,300 or 200 is that range we are looking at. Thursday, a short straddle was sold on the Sensex at 77,300 strike at 596 total premium. Call plus put combined with a long put wing at 76,800 strike was bought as protection. Sensex opened at 77,200, sold off to a low of 76,200, closed at 76,920. At the low of 76,200, the 78,800 wing printed almost 500 points on the intrinsic value. The hedge paid off, and that is the reason we pick up hedges. At the close, the wing was 463 points out of the money. It expired worthless. The straddle writer kept 210 rupees of net premium. The naked short straddle writer collects the same 210 on a quiet day, but on this day gets blown out as Sensex went more than 500 points against them. So cost of the wing was 35 points. That is the rent on the insurance. Implied volatility was at 15.52% on Thursday. Deep sell wall regime. So in higher IV regime, say 25%, the same wing would have cost more than 150 to 200 rupees, 3 to 4 times the rent. The lesson is timing. Cheap IV regime is when you load on hedges, not when you remove them. The wing does not always pay, but when it does, like Thursday, it pays the entire tail. Lets you stay in your structural trade without panicking out of the low. So hedge when boring, not scared. That was the lesson we learned on episode 28, demonstrated live 2 sessions later. So bottom line, today for Monday, gap up, open near 24,200 in the zone, fade extension above 24,300. So 24,300 is that level where you start booking your longs. Buy dips towards 24,000. So buy on dips continues. The floor stands at 24,000. So if there is no break level, we could see 24,000 acting as a good support. Tuesday is expiry. Pin trade live structure is straddle sell on the magnet wing, that is 24,000 to 24,200. Wing protection at put side on 23,800 strike. 23,800 IV is still cheap. Wing rent is small, so keep a watch on that. You can buy that as a protection. April closed plus 8%. Sell in May is the seasonal frame everyone is reaching for. We will test it on Tuesday with the chain stacked. If 24,000 holds the pin and the May series carries forward, if Brent backs to 125, you scrap everything out. The market always telegraphs. You just have to know where to look at. I am Tanmay Kurtukoti, guys. This is the Tanmay Edge, streaming live on rupeecase.com, India's first systematic investing terminal that I am building. Hit follow on Apple Podcast, Spotify, and smash that button on YouTube if you like it. So today is the rupee case rebalancing. We'll talk about it tomorrow. So you just got earlier, guys. Have a happy trading day.